Welcome to the People's Podcast, an employer's resource by Group Management Services. I'm your host, Alyse Kimble.
This podcast does not constitute legal or financial advice. Its accuracy, completeness, or adequacy is not guaranteed. Use the information at your own risk. Consult an attorney or financial advisor before taking any action.
Welcome to the People's Podcast, where we help small business owners navigate the challenges of running and growing their businesses. Today, we're diving into the most critical and often confusing topic, tax compliance. And we have Eric Dorenkott, Director at Corrigan Krause, CPAs in Westlake, Ohio, joining us today. Welcome, Eric.
Well, thank you. Thank you for having me.
Absolutely. It's a pleasure having you. So you've been helping small, medium-sized businesses stay compliant and audit ready for 15 plus years at Corrigan Krause specifically. What do you love most about your job?
Well, I've been doing it for a total of 25, and probably my favorite thing is just meeting clients and getting to become a trusted advisor for them. I have a lot of clients that are more than clients. They're friends. We go to weddings, we go to funerals. We're always there for them. And just having that connection and that desire to truly help them is probably the best part of my job.
That's so great.
Yeah.
I love that. And it's nice when clients actually get so close.
Yep.
They're like friends.
Yep.
It's wonderful. So let's just kick it off with a question about the common misconceptions about taxes.
Common misconceptions that probably the biggest thing that I see is someone always wanting that, what's that one thing that's missing so I pay no tax? Like people don't want to pay any tax, but that's not rational.
Right.
That's not reasonable, right?
I would love to pay no tax.
Right. Everyone would like to pay
Please
no
sign
tax,
me up.
but there's not some magic bullet. But there are ways to plan for it. There are ways to reduce it legally. That having the right CPA will really help you get to that number that is fair and equitable.
Love that. If you had a piece of advice to give business owners about taxes, just overall, other than what you just shared, what would it be?
Don't wait till the last minute.
Okay.
Really. When you're being audited, it's already too late.
Okay.
Right? Plan for your year end. Don't tell your CPA after you've already bought the building. Don't tell the CPA after you've already signed a letter of intent to sell your business. Those are the worst things.
Okay.
So
Be
really
proactive.
the goal is be proactive, plan, and keep your CPA involved in your day-to-day business.
Yeah.
We do a really good job of meeting with our clients, multiple times a year to know what's going on, being actively involved.
Love that. And it's a true partnership that way,
Absolutely.
right, as well? Because you are the advisor.
Right.
You know most about taxes. They should want to keep you in the loop on all those things.
Absolutely.
Love that.
And sometimes it's not just about wanting to know something about taxes. It's just knowing what's going on in their business, because then there are things that come up when you have these conversations that go, oh, we never thought of that. We could do this.
Yeah.
So it's very helpful to be actively involved with knowing what's going on with your client's business.
I think that's great. So state and local tax laws can feel like a maze for owners. What are the most overlooked differences between states and municipalities, and how are those misunderstood, and how can they impact business owners when they don't do them right when it comes to their bottom line?
Sure. So not every business is in multiple states.
Correct.
Right?
Yeah.
But there are things that cause you to have requirements in other states. So if you have employees in another state, if you have a certain number of transactions in a state or a certain dollar level in a state, that can trigger your requirement to file in that state. And not every state has municipalities. Ohio is one of the very few states that have municipalities.
Isn't that so great?
It's phenomenal, let me tell you. So you really you gotta plan for knowing what are the requirements for that specific state. And when you trigger one of those requirements, what do you have to do?
Okay. And that's getting your CPA involved and kind of saying, hey, these are some questions I have. Can you help me answer?
Correct. And when you hire people,
Yeah.
right, you have to know where are they going to be working. It's not just about where they live. Where are they working?
Right.
So
Yeah, and a lot of business owners don't think about that.
they don't.
For
And
sure.
especially now with today's work from home,
Yes.
right? So now you have requirements that, employee A might be working from their home 100% full time. And that now means you might have a requirement in that city to file.
Isn't that crazy?
Yep.
Crazy. Are there any tools or strategies that you recommend for staying compliant across multiple jurisdictions for clients?
Yeah, so one thing is I would do is track where your employees are working.
Okay.
Track where you have inventory. Sometimes people have inventory in warehouses that they own in other states so that it's easier to move it around the country. Those are really important things that we have to track.
Yeah.
And the employer needs to know.
Okay. I love that. Employees, let's talk about employees versus contractors.
Sure.
It's a classification, obviously, and honestly, a very hot button issue for audits.
Absolutely.
What are the red flags the IRS really looks for, and what proactive steps can business owners take to avoid any mistakes?
Sure. So if you are ever audited, the agent's always going to ask for all your 1099s. So a 1099 is what you issue to a subcontractor. They're also going to ask for your W-2s so that they can compare the two. All right, you should, for the most part, you should never have an example where an employee also receives a 1099.
Right.
Okay. They are then going to look at your 1099s and say, why is this person labeled a subcontractor and not an employee? So every time you have a subcontractor, there is a list of points on the IRS's website that you should review and say, is this person really a subcontractor and not an employee? And each time you hire someone or engage them, if they're a sub, you should look at that and make sure, hey, am I classifying this person correctly? Sometimes someone will get engaged as a sub and that person will contact the IRS and say, hey, I was really an employee. And it's usually when they do their taxes and realize they owe both sides of Social Security and Medicare.
Yeah, they get mad.
Yeah, I thought I was an employee. No. And they get mad and they have a lot of tax due. And so they could say something.
Yeah.
And you have to be prepared. You have to be, you have to have your facts in order. And why did I label this person a sub versus an employee?
Yeah.
And then what happens is if you go through your list every year and you go, oh, geez, I should have labeled this person a sub, or I should have labeled this person an employee. There are steps on the IRS's website that you can do to remedy the situation. So it's better to remedy the situation before you get caught. And the steps are pretty interesting. You can actually avoid some of the tax and interest and penalties if you go back and correct it.
Wow. Okay, so being a little bit more proactive when you
Definitely
realize you made a mistake.
Proactive is better than getting caught.
Absolutely. Absolutely. And what I think Eric's referring to is the 20-point checklist of the IRS. It's on the IRS website.
Correct.
And I think the most common things that I see are like construction companies providing tools, making,
Controlling the schedule.
hours, yes, things like that, giving like company trucks to drive, those kind of things.
That's a big no-no.
Yeah, those are
You don't want to
very
give
common.
a sub, a right to one of your vehicles.
Absolutely. It's commonly done. People just don't know.
Yeah.
I think
And
it's an education thing.
Construction is really one of the bigger ones.
Yeah.
That you see that issue happening.
For sure.
So, but really, when you employ someone, you really should look. What am I going to require of this person? Do I control how they work and their hours and give them tools? And if you can say yes to some of those, then you really got to think about making them an employee.
Absolutely. And I think and I'm going to break a little bit away from, our normal questions here, but are there advantages of having employees versus contractors from a tax standpoint for businesses?
Not from a tax standpoint, but I would say from a liability standpoint, that's probably the bigger advantage, because if they are your employees, they are now covered under your commercial insurance,
Sure.
Errors and omissions and things of that nature. If they're sub, you got to hope, if you're not checking, that they are covered under
They have
their
workers' comp insurance, yeah.
Or just general liability insurance. And I have if I can tell an example, I have a construction company that they hired subs. The sub ended up making mistakes that cost hundreds of thousands of dollars, and the sub didn't have the correct insurance. And so who gets stuck with that bill? Right? It's the GC.
Yeah.
So
Absolutely.
unfortunate, but it does happen.
I'm sure it does.
So sometimes if you actually bring that person in, if you're not paying attention and getting letters of insurance, they're covered.
Yeah.
So
Yeah. It does take like kind of that risk off the table a lot, for sure. Non-compliance can be expensive, but how much? On
a state and local level, I see penalties anywhere from 5 to 30%
Okay.
of the tax.
Wow.
So depending on, there's non-filing requirements, there is non-payment requirements, penalties. So it can range drastically by state. And actually, I just had an audit from the state of Wisconsin, and they charged 12% interest. It really blew my mind. I said, this is like wrong, guys. But it's in their statute. So not just 5 to 35% penalties, but then you tack on 12% interest. And if you haven't been filing, they can go back as far as you haven't been filing, as far as you were required to. So yeah, it can be significant.
That's crazy. Can you kind of break down the most common penalties and hidden costs that owners might not be anticipating?
As it relates to
Non-compliance.
I would say it's probably when you have an employee in a state and you're not filing, that's an easy catch
Okay.
for the state.
Sure.
So you will get a letter that says you have not been filing. This is what's going on. You need to file these returns, and those penalties can be severe. Again, in that 5 to 35%.
Yeah.
So.
Do you ever see this with like SUTA?
I have, because if you have an employee in the state and you're not SUTA, workers' comp,
Yeah.
payroll withholdings, those three things, if you're not properly classifying that employee, for example, if I'm an Ohio corporation,
Yeah.
but my employee's working in Indiana
Because they're remote.
right? You now have a state unemployment,
Yep.
a workers' comp, and a withholding requirement, and you might just be doing that in Ohio. So it can be significant, but payroll companies help with that, right?
Yeah, for sure. That's definitely a big
Right,
part
but
of it.
part of the issue is you have to tell your payroll company.
Yeah, for sure.
Right.
And you talked about how that can really snowball if those are ignored.
Correct.
Because the interest, like with the Wisconsin
Right, it's significant.
employee,
Right.
which is crazy. So
Absolutely. Now, sometimes you can get out of penalties, but it really helps if you if you come forward on your
Yeah.
own. The states are much more willing to abate penalties if you say, hey, I made a mistake, I'm coming forward. And a lot of states have voluntary disclosure.
Okay.
So, hey, oh darn, I haven't been filing this return for the last 4 years. So you can call the state up and say, anonymously, are there any voluntary disclosure options available to a company? And then they'll tell you, and almost all have them. Usually you can get out of penalties. Can't usually get out of interest because you've had the money.
Yeah.
But usually you can get out of penalties if you
That's
fall on the sword.
That's good to know,
Yeah.
for sure. Because mistakes do happen, and I think a lot of people, it's not like they're trying to not pay these things. They just don't know.
Correct.
They just don't know. So
Now there are those clients that are like, we'll go until
Is
we
there
get
a
caught,
loophole?
right? Because the requirement is more stringent than the penalty.
Yeah.
So it's kind of their thought process, but
I mean,
not everyone. That's not that. I don't suggest that.
agreed. So stories definitely stick, and you've shared a couple of them. Can you share an example where a business maybe overlooked a local tax rule and what the consequences were to that? What could they have done differently in
Absolutely.
that situation?
I literally just this past year picked up a construction contract or client, and they had not been filing the Ohio CAT, which is the commercial activities tax. The CAT has been around for 20 years.
Yeah, it's not new.
This isn't new.
Right.
And when we picked them up, didn't even know that they weren't filing the CAT.
Yeah.
They got an audit letter, and to the tune of over $500,000. So it's very significant, but you need to go over these things with your clients. And the taxpayer also has to come to their tax preparer and say, hey, what is it that I don't know?
Right.
Because sometimes preparers and clients think the other one knows everything. And sometimes they don't. Sometimes they don't know that requirement. I don't know how they didn't know about commercial activities tax, but it's been going on for 20 years, but it was significant. So.
Did it put them out of business?
No.
That's good.
It did not. But
sometimes you worry about that stuff.
you do worry about it. And where you do see companies go out of business is payroll withholdings. If a client does their own payroll and doesn't submit payroll withholdings, but they withhold it from the client, that's significant.
Yeah.
Those trust those trust penalties are significant.
Yeah, absolutely. Remote work
Yep.
and multi-state teams are the new normal.
Yep.
What tax and compliance traps do small, medium-sized business owners need to watch for when filing across state lines?
Really, it comes down to knowing where that employee is doing the work.
Okay.
Okay. They may live in another state, but they could be traveling and doing work in other states.
Sure.
So the requirement really is, where is the employee doing the work? And if they're working remote, even here in Ohio, if they're working, they live in Youngstown, but the company's in Richfield, you have a requirement to withhold Youngstown tax, Youngstown withholding. And I think a lot of employers are under the impression, kind of what happened right when COVID happened is, oh, as long as I keep withholding for where our company is, we're fine. But that's not the case anymore. And I think people really need to look at where each one of their employees works and withhold properly for that particular area. Because now, not only do you have a withholding requirement, but now you have an income tax requirement.
Yeah,
So.
absolutely. Are there any states that are like more stringent or more difficult, do you feel?
Probably our biggest issue over the years has been California.
Yeah. Well, California is its own
Yeah,
animal, right?
it's a whole nother.
In everything.
Right, but California needs money.
Yeah.
And so you have a trucking company that crosses that state line. You're getting a letter because California's gonna know. They are super aggressive with their taxes, and individual income tax in California goes up to 15%.
Wow.
So it's significant. They are the ones that are probably the most hardcore of all the states going after people.
Gotcha.
California, New York's not too bad. They have a high
I've heard
rate.
about New York, though.
They have a higher rate, but California is the one that is really the one causing clients probably the biggest issue.
Gotcha.
Yeah,
Probably a lot of businesses, are leaving California.
absolutely.
And that could be, a portion of the reason why.
Yep.
I think it's just difficult to have employees there.
It is very difficult.
Yeah. Let's talk about seasonal businesses.
Sure.
Because I feel like they're unique, right? They have unique challenges. How can they plan for tax compliance during maybe peak and off-peak periods, and what deductions are most often missed?
Sure. So seasonal business are their own animal.
Yeah.
There used to be a little bit more wiggle room in year ends for the companies, but depending on the type of entity you are, there isn't a lot of wiggle room. So you're most likely still going to have, if you're a traditional pass-through entity, that's where the shareholders report the income from the corporation. Typically, they're a December year end.
Okay.
What I usually do for my seasonal clients is we meet months prior to their busy season. Because if you don't plan, the owners don't want to take the time during their peak season to go through this. So really it's planning prior to that peak season so that the work is minimal during their peak season when things are due. It can be difficult, but it is definitely the way to go. Because if you want to do an R&D, research and development study,
Yeah.
They are not going to be very happy with the R&D people coming into their business during their peak season saying, hey, can we start running, can we get contracts, can we do this, can we do that? They don't want to
Stop business.
stop business to get a tax
That's
deduction.
when they make their money.
Right.
Yeah.
So really it is planning prior to their peak season. Probably the deductions that I see that are most missed is knowing when the client qualifies for research and development.
Okay.
Believe it or not, there's a deduction called the qualified business income deduction, and I'm still seeing that missed. It came in 8 years ago probably, and I'm still seeing that missed on.
Can you talk a little more about that?
Sure. If you have a qualified business, which is the majority of businesses, you get a free 20% deduction from, and you only have to report income, or you report 100% of your income, but you only pay tax on 80% of your income. And that can still be missed today. It's pretty surprising.
Wow.
I don't see it a lot, but I see it enough that it surprises me.
Interesting.
Yep.
Very, very cool.
Yep.
When it comes to seasonal businesses, are there any tips for maybe smoothing cash flow and tax obligations during maybe the slower months versus their busier months?
Well, they could, if they are, they can annualize their tax payments.
Okay.
So they could say, hey, I make 75% of my income in this quarter. If they're paying estimated taxes, which most companies have to do, either
Right.
the company or the individual, they can pay 75% of their estimated tax in the quarter that they're earning it.
Okay.
So, you know, you could have,
More
you could
here,
hold,
less here.
yes, less in the beginning and more during the peak.
Right.
So that's probably the biggest helpful thing that a company can do during seasonal.
Love that.
Yep.
So we're gonna do a tax myth busting lightning round.
Okay.
You ready?
Yep.
So just true or false.
Sure.
Okay. If you file an extension, you don't have to pay taxes until later.
False.
Paying contractors through apps like Venmo means you don't need a 1099.
False.
Home office deductions are a red flag for audits.
False.
Love it.
All right.
Well, Eric, thank you so much for sharing your expertise. And for our listeners, if you want more resources on compliance, HR solutions, visit us at www.groupmgmt.com. And until next time, keep growing. Thank you, Eric.
Thank you. Thank you for having me.
Thank you for tuning into the People's Podcast. We hope you found today's discussion helpful. Stay tuned for more insights in our next episode. For more expert guidance and resources on small business management, PEOs, and more, give our podcast a follow. Find us on social media or visit us at groupmanagement.com. That's groupmgmt.com. We're dedicated to helping small businesses everywhere make their operations simpler, safer, and stronger.